All right, good morning, everybody. Happy Saturday. Bitcoin Brandon here with early morning crypto talk. Good morning, Chris. Good morning, Benita. Jeremy. Rohan, good morning. We'll be getting started in a moment. Hope everybody's having a good crypto morning today, Saturday. Good morning, Michael. Good morning, Elizabeth Mafus. Good morning, Venita. As I always state, I am not a licensed financial advisor to be dispensing financial advice. I read the news, give my opinion, give suggestions, and it's up to you to take that information. Do your own research and make your own adult decision. So let's go ahead and get started. We're going to talk about a couple of articles here. One, a former journalist recounts losing $7 million trading crypto. How did you do that? So let's take a look at this. I will put it in the chat box. And as I speak, I'm watching the charts. All top 100 is in the red. Bitcoin has dipped below 8,000. So we'll be watching how that turns out today. All right. Former journalist Derrick Rose. Derrick Rose, the basketball player? Nah. Recently recounted his story of losing over $7 million in the cryptocurrency markets. Mr. Rose had invested his life savings into cryptocurrency. Oh, right there. What do I always say? Top 4 rules to survive the crypto landscape. Number 1, education. Number 2, never invest with money you cannot afford to lose. You should not be putting your life savings, your house, your mortgage, your 401k. No, that is a huge risk. Yes, if it pans out, you just made off big. But more than likely, it's not going to pan out that way. Michael Spriggs asked if my voice went out. Can you guys still hear me? Let me give me a like or a heart. Let me know you can still hear me. But never invest your life savings just because you saw somebody else make money. So that already red flag right there. But let's continue. So he invested his life savings into cryptocurrency, using leverage trading to grow his account by 3,500% in a matter of months before his trading account was liquidated. What do you mean before it was liquidated? So he made it off big. If he put his life savings in and it grew by 3,500%, take your profit and run. Mr. Rose stated his initial hesitation in telling his story in a public forum, stating his expectation that people may think he is an idiot. Yeah, I do, just from what I've read so far. Mr. Rowe concedes that such an assessment may be kind of true. It is true. Recounting that he ignored the advice of his friends, a financial advisor, and random people on the internet in making larger and larger bets on Bitcoin and similar instruments. So, everybody told him, don't do it. He did it anyway. These investments, Rose states, paid off until they didn't. That's how it always works. It always works that way. Yeah, everything is good until it's not. Everybody's making money until they close the door. It says it paid off, resulting in the loss of a small fortune. Mr. Rose stated that his first moves in the cryptocurrency markets were smart, reaping the rewards of patience and careful research. Mr. Rose states that rather than take profits, what do I say? What's rule number 3? See, number 1 is only invest with money you can afford to lose. Rule number 3, get your return on investment ASAP. Don't get greedy. All right, so he already broke rule number 2. He take profit. All right, at least he's admitting this. So he said, rather than take profits and say buy a house, he bought more Bitcoins. Mr. Rose first invested in Bitcoin in 2013 when they were worth less than $100. He authorized Coinbase to take $25 out of his bank account each week. Oh, that's not bad. Buying a quarter of a Bitcoin for $25. Mr. Rose adds that when I moved from New York to New Zealand later that year, I needed cash. So I stopped those withdrawals and later sold half of my 10 Bitcoins for around $500 to pay off some debts. Dope! The allure of the 2017 bull market. Mr. Rose stated that around May of last year, when Bitcoin topped $2,000 and another cryptocurrency called Ethereum hit $400, he decided that while he made a big mistake, there was still time to rectify it. A wild idea hit him. Cash out his entire U.S. retirement account and put it into cryptocurrency. Single and in my mid-40s, I was ready to take a risk and shake things up. It was nerve-wracking withdrawing my entire life savings, $3,500 each day, to avoid hitting Coinbase's $25,000 weekly limit. Of course, the market crashed soon after I started my plan, but I stuck with it, and it bounced pretty quickly. Mr. Rose stated that he bought $500,000 in Bitcoin when they were less than $8,000. Okay. Only to see their value rise to over $14,000 in a few short days. Again, Mr. Rose purchased more Bitcoin. What in the world? See, that's another rule you learn in education. The only way you justify him buying more Bitcoin at a $14,000 price is if he sold and made a profit. He didn't. He just kept buying. In addition to just about every cryptocurrency I could buy on the margin on Bitfinex, these investments saw Mr. Rose turn around $70,000 into $3 million by placing leveraged bets on two cryptocurrencies called EOS and IOTA in a few weeks during November and December. See where this is heading. Mr. Rose stated that at the peak of the cryptocurrency frenzy during December 2017, his account was over $7 million. Adding that he had borrowed, what? He borrowed $14 million to buy more cryptocurrencies? See, this is why you might think that the 4 strategies I tell you is simple. But this is why it is difficult. Number one, education. Why is education difficult? Because people don't want to spend the time to learn something new. Most people by nature are lazy. They don't want to spend time doing no freaking research. So that's a difficult thing to do. Number two, invest with money you can only afford to lose. Why is that difficult? Because you might say to yourself, I can only afford to lose $400. But you see your buddy Tommy had put in $20,000 and now he turned that $20,000 into $80,000, and you think to yourself, wow, if I pull out my savings, I could radically change my life overnight. So you put in more than you can afford to lose. That's why number two is difficult. Number three, you think would be easy, right? Return on investment. Pull your money out. Get your profit out. You think that'd be easy, right? No, look at what this guy did. He was like, wait a minute. I flipped 70,000 into 700,000 into 3 million into 714. I'm going for it. I know people personally that have done this. When I told them, pull your money out, they didn't do it. So far, this guy has broken 3 of the rules. So he turned 70,000 into 3 million, turned that 3 million into 7 million, and then he borrowed 14 million to buy more cryptos in December. That's another major rule. Don't buy high. Never buy high. Education tells you that the market will correct. Wait till the market drops and corrects, then you buy more. Take your profit out while it's high, wait for the market to correct, and then buy more. That's what you do. So, Mr. Rose was paying thousands of dollars a day in interest on his positions. However, with each $1,000 rise in Bitcoin's value, he was making about $500,000. In those heady days, Mr. Rose stated Bitcoin was making $1,000 gains every other day. And it was true. I was there. We all were there. We saw it happening. But it was not sustainable. We knew that. Well, those of you that were educated knew that. Mr. Rose recounted text messages exchanged between he and his friend before his account was liquidated. One acquaintance stated, if you are right that having 1 Bitcoin is impressive in the future, that's what I say. I say that right now, guys. You should make it a goal to at least own 1 full Bitcoin, because it's going to be rare to meet people who have at least 1 full Bitcoin. Everybody will have pieces of a Bitcoin, not 1 full one. So I agree with that. He said it. If you're right that having 1 Bitcoin is impressive in the future, then what you have now is more than enough. So you can sell a bit and hold some cash. To which he responded, I want to own a sports team though, and have a yacht. These things add up quickly. Mr. Rose's acquaintance pleaded, if you are right, then half your bet is enough. If you are wrong, you are broke. See this? This is where greed takes over. Everyone was telling him, at least sell half. If he sold half, he still came out big time on top. Big time on top. Millions. No, he was going for Bill Gates. This is what happens with people with gambling addiction. They go to Vegas. They're ahead. They think they have a hot streak and that they're going to continue winning. That's why the house always wins in the end. The house, never bet against the house. Dude wanted a yacht. And a sports team. Really? Your life savings was $70,000 and now you're thinking of a yacht and a sports team in a matter of months? Despite the dramatic loss, Mr. Ross states, while I have a lot of regrets, Cashing out my entire life savings to invest in cryptocurrency isn't one of them. This was a huge blow, but it didn't wipe me out. Mr. Rose adds that overall, despite my Bitfinex liquidation, I am still doing better with my investments than I would have had I stayed in index funds. Okay, what this article is not saying is, how did he liquidate? What did he do? Did he sell? Because $70,000, and he bought when it was at $8,000 a coin. In December, when it reached $19,800 and dropped, it only dropped down to $12,000. And it hovered between $10,000 and $12,000 for all of January. Beginning of February, it dropped down to $5,900, rose back up to $11,000, and now it's at about $7,900. So which meant if he didn't sell and held on to his coins, he still came out on top. So he did one of the biggest problems or worst things to do. Sell when it drops. You buy low, you sell high. He bought high and sold low and lost millions. Hope you guys have learned something from that, from Mr. Rose. Derrick Rose. I think he has a basketball player's name. Derrick Rose. All right, let's go on to the next article here. Data reveals the reasons behind Bitcoin's big dip. Oh, this is interesting. What are the reasons behind the big dip? We're still in a bearish market. Here's that article. As everyone knows, Bitcoin has dropped roughly threefold from its December peak. At the height of the mania, it touched $20,000, but has since fallen to as low as $6,000. The question of what caused the great decline is one that most Bitcoiners have an opinion on. In a bid to settle the matter once and for all, Chainalysis has pored over the data to determine what happened. Chainalysis is a respected research team whose data scientists and blockchain analysts have previously claimed to have worked out where Mt. Gox's missing Bitcoins wound up. In the great Bitcoin price dip it causes and a way forward, Chainalysis turns its attention to BTC price action over the past 3 months. A lot of what's in the report could have been deduced without glancing at a graph, but it's interesting to see these observations backed by evidence. According to Chainalysis, Bitcoin's big sell-off was a result of regulatory news, driving trading volumes, and a peak of positive sentiment pushing price, and a lack of fundamentals resulting in herding behavior across increasingly correlated exchanges and cryptocurrencies. Basically, we're all just a bunch of herd animals driven by our emotions, and when one of the flock gets spooked, we all do. Determining a fair valuation for the price of one BTC has kept the brightest cryptonomists, that's not the right word to use. It's economics or something, I don't know. Maybe he's right. Cryptonomists up at night. No, I'm still saying it wrong. Cryptonomists. There you go. Cryptonomists. Chainalysis acknowledges the difficulty of valuing Bitcoin, part of a new asset class, writing, traditional markets have an established set of market fundamentals that help investors understand the contextualized price and volume fluctuations. The cryptocurrency world is still figuring out the correct fundamentals to use in situations of massive price volatility. It then adds, trading volumes were sensitive to regulatory news, while price was driven by sentiment. Anyone who followed Bitcoin's trajectory throughout 2017 will have been aware of Bitcoin's susceptibility to regulatory news. The cryptocurrency saw a major sell-off following news that China was to ban Bitcoin, but made a full recovery within weeks. In its report, Chainalysis also references other commonly used markers to denote the mania phase that Bitcoin settled into through the later half of last year. Google searches climbing faster than the price, Bitcoin couldn't maintain its insane upward trajectory, and something had to give. In the stock market, a price correction is defined as a decline of at least 10%, and a bear market is a decline of over 30%. Between December 17th and February 6th, the Bitcoin price declined by 70%. The broad conclusions drawn by Chainalysis that regulatory events and emotions drive the markets are not surprising. The report does contain some interesting findings, however, such as the fact that trading volume across major exchanges became increasingly correlated through December and January compared to the whole of 2017. This meant that what happened on one exchange would be mirrored almost instantly on another. If one whale got spooked and dumped, say the Mt. Gox trustee, for example, everyone got spooked. There's something else happened in December that didn't happen in all of 2017 as well that this article has not mentioned yet. It's the futures. It's the introduction of the CME and the CBOE. When that happened, there was no way to accurately predict what would happen next because it had never happened before. And now you've got the professionals that come into place, and they bet high or low, manipulating the market. They brought down the price of Bitcoin. That's not mentioned here, and it should be. It's not just news of regulation and emotions. There's more factors at work here. As Bitcoin mania reached fever pitch in December, exchanges experienced a new inflow of Bitcoin. Investors were depositing more crypto than they were withdrawing. As a consequence, supply was increasing at a greater rate than demand, and therefore the high price levels could not be sustained, notes Chainalysis. The report concludes by providing evidence that altcoin prices are increasingly correlated with Bitcoin prices. Oh yeah, we knew that. There might be more altcoins and tokens than ever before, but some things never change. What happens to Bitcoin happens to them all. Okay, let me stop there. Yes and no. Traditionally, throughout 2017, if you look at the markets, when the altcoins went up, Bitcoin would go down because people were selling their Bitcoin to buy altcoin. And when Bitcoin went up, the altcoins would go down because people were selling their altcoins to buy Bitcoin. That kind of changed around November and December, where now you see they both go up or they both go down. The only coin in there that's kind of, what's the word to use, exempt from that is Tether. When the market goes down, Tether seems to go up because people are taking their coins out, the volume out, and putting it into Tether for safekeeping. So we're still at the beginning, early stages of this. We're now coming up, finishing the first quarter of 2018. Can you guys believe that? We're almost 3 months finished with this new year. 3 months finished. Have you guys cracked a dent on your New Year's resolutions yet? Have you come close to achieving any of that? Are you even on the path to make it happen? Because that goes to rule number 4. Rule number 4 is have a game plan. Where do you see yourself in 3 months, 6 months, and a year? What are you going to do to make that happen? Stay focused and not get distracted. Are you at least on that path? You don't have to have, succeeded yet, but are you at least on the path? And it's okay. See, when I began January 2018, I had a plan. I had a goal. My ultimate goal was to make multiple 7 figures by the end of 2018. That was the goal. I had a vehicle that I was part of that was going to make that happen based on what we were doing. Anywhere between 2 to 4K a day. A day! And then using that money to invest in other things, diversify, ICOs, blockchains, new companies. Let your money work for you. But it didn't take very long for that plan to hit the gutter real quick. The first few weeks into January, that plan was out the window. But guess what? My goal never changed. Multiple seven figures by the end of 2018. All I had to do now is just find a different vehicle. So the goal never changed. So for the last 3 months, what have we been working on? Cryptogenics. And then the other part of 4 is stay focused. I'm only focused on cryptogenics. even one of my leaders, and all I can do is shake my head, called me up a couple days ago. And I was giving him some updates on what we're doing. And oh yeah, he was excited about that. And then he says, oh yeah, but I got this other thing, B, you got to take a look at. I got this other thing, it's kind of taking off, and we might want to get on that. I said, are you serious? I mean, really, are you serious? You got to stay focused. Let us launch. You have a source. See, people say, isn't it wise to have multiple streams of income? Yeah, but you can't have multiple streams of income until you at least get one stream of income. You got to have a foundation. And then you can expand from that. Stay focused. And for those of you that might be sitting there right now saying, I have no idea what to do. I have no idea how to achieve the goals that I want. I want financial freedom. I want to be able to walk off my job. I want to be able to at least take a nice vacation this year. I want to eliminate that second job. I want to be able to buy things for my children, pay for my kids' college. And I know that working the job I have is not paying me enough money to do all that. And I get frustrated looking at, this crypto space, and people are making a whole lot of money, and I know that it can be possible. I just don't know where to begin, where to start, how to get involved, and I might even be a little bit embarrassed to ask. There are people out there like that, all over the place. They know they want more, but they're not going to ask. They want to see if they can figure it out on their own. See, that's what cryptogenics is for. It's to help those people out. See, the reason why we don't talk about money, the reason we don't talk about how much are you going to make per day, how much are you going to make per month, because that's not what cryptogenics is about. Cryptogenics is about something that is more powerful. As a kid, I learned a lesson in Bible study, Sunday school. And we learned the story of Solomon. And as a reward to Solomon, God was going to give him a reward, said, what do you want? Anything you want. And Solomon could have said, I want to be rich. I want to have money. I want to be the richest nation in the world. He could have said that. You know what he asked for? Wisdom. Wisdom. And wisdom is why he became one of the richest men ever in history. He had the wisdom. So with cryptogenics, once you gain the knowledge, once you gain the education, once you gain the wisdom, when you apply that knowledge, because you're going to learn a 6, 7, and 8-figure information, you apply it, the money will come. We don't need to be hyping out who's making what, showing dashboards, showing off how much Bitcoin we made. That's not what we're about. We're about educating the masses. Will there be some people that make a boatload of money? Absolutely. Will there be some people that don't make anything? Absolutely. That is the way of the world. But at least everybody is going to have a chance. And that's more than most people even get. At least you have a chance, and it is in your hands what you do with it. Your responsibility. But you're going to be in an environment that's going to help you along the way. That's what cryptogenics is all about. And speaking of environment, the last couple of Saturdays, we've been doing update calls, and you've been hearing from the co-owners of the company. Fully transparent. You got to hear from all of them. We call them the Core 5, spelled with a K. Core 5. Now, we're going to introduce you to the top leaders. Those who are what we call pinnacle leaders that have been here since the beginning, that are helping make this company what it is. In fact, in our cryptonary, which is just 2 teams, you guys may call it binary, we call it the cryptonary. Everybody in the company will fall under these individuals because there's only 2 teams, and these individuals represent both teams. They're the top leaders. So today, in an hour and a half from now, we're going to have a special call where you're going to hear from these leaders. You're going to hear about their background and why they're excited about cryptogenics. So if you want to hear from the leaders, come on in an hour and a half. I will post, well, it's on my Facebook page, but let me get that information. I will post it in this chat box as well that you can log in from. You can log, people from all over the world can log in. That's no problem. There's no limit on this. Now, we had some technical difficulties last week because we attempted to do it Zoom style. But this way, we're going to be able to have it conference call style, or you can log in from your computer. All right, guys. That's the information. I hope you learned something today. I will see you in an hour and a half. Bitcoin Brandon out. God bless. Bye-bye.
Cryptogenics.